You're listening to the Tax Insights podcast, where the professionals at Hawkins Ash CPAs break down complex tax topics into bite-sized how-tos. As 2022 comes to a close, business owners can make some year-end moves to help reduce their tax bill. In this episode, Jeff Dvorak shares tips for year-end planning given the outcome of recent elections.
Now that the election is over, it really looks like we're going to have divided government in Washington for at least the next couple of years. And what this normally means is that there's not a lot of tax changes. And so that being said, let's talk about some tax planning ideas for the end of the year and things that may flow into the future from a business point of view.
All right, so from what I understand, 2023 will be similar to 2022 from at least a tax point perspective, correct?
That's right for the most part. There's one exception is bonus depreciation. And, we've been used to having 100% bonus depreciation, which means that in general, a business can write off an asset in the first year that it purchases it, rather than having to depreciate it over its 5 or 7 year schedule. Now, for 2023, that bonus depreciation is still there, but you can't write off the whole asset. You can only write off 80% of it. And then it decreases in the future until bonus depreciation is gone. Now, we're to note, this is one of the things that might change here with some year-end legislation, so we'll have to follow these rules closely.
All right, so would the recommendation then be to buy equipment right now?
I think if a business is looking for deductions this year, then I would say yes. But my caveat is, for all businesses, only buy assets that you need. If an asset would be nice to have, but you don't necessarily need it, then you probably want to wait. And, a business should do an analysis to see, does it make sense for us to buy it? Or are we cheaper just renting it when we need it?
All right, Jeff, what else can be done then?
So if you're a cash basis business, which many companies are now, then it makes sense to defer income and accelerate deductions. Now, we've heard that for a long time. I think that still makes sense for this year. This means paying some of the expenses that you would normally pay in January, pay those early, pay those in December. Now, this works for cash basis companies, which record their income when they actually receive it and get the deduction when they actually pay it. But it doesn't work for accrual-based businesses because they pick up their income and deductions when it's incurred, not necessarily when it's paid.
So we talk a lot about retirement plans. Can anything be done here?
Yeah, this is an area that can really make a difference. As a business owner, if you're not maximizing your retirement plan contribution, this should be done. Now, what a business owner can do is they can take a bonus before the end of the year and take the majority or all of that bonus and use it to maximize their 401k or simple or other retirement plans. For most business expenses, you need to spend $1 to get a deduction. But with retirement plans, it's like moving money from one pocket to another.
Jeff, a lot of great information here on today's program. Before we get going, anything else that we want to remind our listeners on?
Yeah, and this will only affect a small amount of businesses, but over the last year or so, many pass-through businesses, such as partnerships and S corporations, have been paying their shareholders tax at the entity level rather than at the individual level. And you can get some additional state income tax deductions by doing this. Now, this is a complex issue, so that one you definitely want to discuss with your CPA or accountant.
And that is why listeners need to connect with the team over at Hawkins Ash, the experts. Jeff, how would listeners connect with you guys?
I would go to our website, hawkinsash.cpa, follow us on Twitter, even like us on Facebook.
Hey, Jeff, thank you for your time, and we'll talk to you next week here in Tax Insight.
This has been Tax Insights, presented by Hawkins Ash CPAs. Learn more online at hawkinsashcpas.com. Hawkins Ash CPAs, part of your business, part of your life.